Thank you so much for sitting down with me today, Will. And just to start off, I mean, can you help me give some insights on how the M&A landscape globally is different from the Indian landscape, and how Indian consumption is sort of driving investment or acquisition interest from global giants here?
Yeah, it's a big question. So I'll try and find my way into it. I suppose. So maybe first of all, if I step back and look at the global market first, and then come for M&A and come then to think about how that's translating into India, and some of what's similar and some of what's different. I think globally we've seen, after a huge boom in M&A up till early 2022, we've seen quite a significant slowdown in general M&A as cost of capital increased, interest rates raised, and that has started to return, but is only growing gradually, I would say, at the moment. So it's still a bit subdued versus historic levels, but it's really quite different across different sectors. So you'll find in industry sectors, in verticals that have still got good fundamental underlying growth, structural growth, that actually M&A is happening, and it's more in the places where there are perhaps more questions about the growth outlook of businesses, or less certainty around margins as sort of input inflation has been impacting different industries. Those are the places where M&A has been slower, and that's resulted in actually also sort of differences, I think, in who's doing M&A. So you've started to see big corporations, certainly over the last 12 months, accelerate M&A again, probably more so than the big private equity investors, who are still a bit more dependent on the cost of debt, which is still relatively high, starting to come down, but relatively high. So we've seen, I think, big, strong corporates that have come through all the turbulence of COVID and impact of Ukraine war and inflation. They're starting to flex their balance sheet and do some big deals, but others are still a bit more cautious. I think that has also created quite an active market for private credit. So when you look at who's lending money to fund M&A, and also continuation of deals, so you're seeing quite a lot of businesses that might have been owned particularly by private equity, effectively going through continuation deals where they stay within the same private equity ownership but perhaps move into a different fund, and that's being financed often by private credit funds. And actually lots of these private investors have now got bigger credit operations than they have equity investments. So I guess if I step back, that says that it's still a slightly subdued M&A market, but it is gradually starting to grow again. I think the M&A market doesn't like uncertainty, and so I guess the things of the last few weeks in terms of tariff, not necessarily actually the tariffs themselves, but the uncertainty about exactly what will or won't be in place, that makes conditions pretty difficult for businesses that are dependent on cross-border trade. And so I think for those businesses, there will need to be a bit more certainty about how that's going to play out before M&A becomes really viable in those sort of circumstances.
I also want to get your insight on in terms of how is this playing out for India, particularly in terms of consumption, in terms of how they might benefit of the lack of tariffs if it goes on another country. So I just want to understand how India is going to play out here.
Well, I think India is sort of increasingly been recognised as one of the probably few at the moment really strong growth engines of the world economy. And therefore, I think you're seeing global capital putting more and more interest and more attention into the Indian market, and obviously a pretty well-developed capital market here and a well-developed sort of set of businesses here. So I think India is probably one of the most exciting markets globally for M&A at the moment, and that's partly because the structural growth that is going on in the Indian economy, both the sort of consumption economy, the consumer economy, which is clearly accelerating rapidly, as well as goods and services that are being sold to other export markets. All of that's growing rapidly. The infrastructure investment that's going into the economy is also then sort of recirculating back into more spending. So the structural growth of the economy gives a much clearer and positive outlook for, I guess, more businesses, and therefore more certainty for M&A investors to think that they're going to get good returns on that. So I think it's a particularly strong place, I would say, for M&A at the moment, and I think even more attention coming into India because of some of the slowdown in other parts of the world. Like we'd already seen ever since COVID, but the Chinese economy had slowed from previous fast growth, and also frankly got probably a more difficult place for some sort of global businesses to operate in. And so you're starting to see businesses and investors look for other significant markets with growth, and India's top of the list of that. And I think that's only increasing now as the tariff impacts have particular challenges in places like China.
Understood. And you mentioned that M&A activity for some sectors is still going strong, where fundamentals are strong. So any particular sectors you can help me with where investors are sort of shying away from risk, any particular sectors that they're more bullish on particularly?
Yeah.
So, what's the understanding of it?
So if I look globally, then I would say that even within sort of consumer spending, which in the West is pretty stagnant at the moment, very slightly growing, but there are some pockets which are still growing quite well. So anything that is linked to consumer health, so that might be vitamins, minerals, supplements, health aids, healthcare services, has all got good structural growth and is getting investment. The pet sector has been a really buoyant one for the last few years and continues to be strong. Not necessarily increasing pet ownership, but increasing spend on pets, treating pets as part of their family, like children, has all enabled lots of premiumization, lots of new services being sold in that kind of sector. Probably some of the others that we've seen being quite resilient actually have been ingredients. So especially specialty ingredients that then go into lots of different foods or pharmaceuticals or beauty products. That's been an area where the underlying demand has been sort of relatively stable, slightly increasing, and lots of scope for consolidation. And that's probably one of the other things which also encourages M&A. If people can see there's real value to create by consolidating, building bigger businesses, cross-selling, and also finding cost synergies, then that will also encourage M&A. And there have been some quite successful deals happening in that space. And because investors tend to pursue things which they've seen have worked in the past, so you've seen lots of people pursuing that sort of growth path and trying to build platforms in areas like ingredients.
And while investors obviously big idea what's happened in the past and what has worked in other geographies, there's some facets of Indian consumption sector that have not worked anywhere else and that are growing very well here.
Yeah.
So I want to understand in terms of how do you see global capital flowing into those? Like for instance, quick commerce has been like a India grown phenomenon at this point. And how do you see global capital coming into it? How do you see global capital and global MNCs performing with this space overall?
So I think quick commerce is a really interesting example because, as you say, it's growing massively here, and I think is proving itself economically successful as well. It went through a phase of rapid growth in some other parts of the world, and certainly in Europe where I'm based, and then has retrenched again, really because they couldn't get the economics to work. So lots of people lost lots of money. I think it sort of comes back to investors ultimately need to really understand the fundamentals of the business. I guess I would say that as a strategy consultant, but both the demand is there, but also the economics and the business model and the alternatives to know whether actually that model is going to thrive. And I think all the indicators are that in India, the economics work in a way that it didn't work in some other geographies. People all around the world like the idea of super convenience and being able to order and very quickly get goods. So that sort of universally appealing. What they weren't prepared to pay for in other markets was the cost of fulfilling it, which was quite high, and certainly in somewhere like Europe. Whereas I think the economics of that are working much better here. And you have the other big difference, I think, is the channel structure of retail. So obviously in India still, the vast majority of it is in very fragmented channels. Some sort of large format modern retail chains, but not that big, so they don't have huge scale advantages. And actually, the quick commerce players have pretty rapidly been able to scale much better return on capital because the cost of investing in a dark store is much lower than a supermarket and a retail format, and relatively cheap delivery options. All of that adds up to something which actually does look like it's really will work and be scalable. So I think, I guess some investors will have been burnt by bad quick commerce investments in other geographies, and they'll need to understand the differences here. But I think there are enough smart people who can get their heads around those fundamentals. A number of these businesses here are now pretty well developed. Probably is always one of the areas where that gives an advantage, if you like. So both local entrepreneurs and local investors, frankly, that are more tuned into those dynamics in India are therefore quicker to understand the opportunities in those spaces. And I think that's something we see all around the world. Often the people that are best plugged into understanding the fundamentals and the dynamics in that market can move faster. So you've got some very big and very successful businesses and business empires in India. So I think you see also those players making sure they're significant sort of participants in these sort of sectors.
And And just one last question from my end. How do you see global MNCs being part of the Indian consumption story? A lot of global MNCs have seen their Indian counterparts perform at par or better than in terms of growth as compared to their global parents. So, what's the insight on that? Why is it playing out in such a way? What's driving it?
Yeah, it's a really interesting sort of dynamic because I guess that you would sort of expect conventional wisdom would be that global scale and scale matters, and I think it's sort of relevant scale in some ways that matters. So because we've actually seen this pattern in a number of markets where the global players haven't necessarily, on average, might have invested a lot of money and built a certain presence, but not necessarily grown as fast as the successful local businesses. I think that is partly, again, down to sort of consumer intimacy, really understanding the market, really understanding what consumers want and the way of sort of addressing them and marketing that compellingly. So you make sure you've actually got exactly the right product proposition for those consumers. Route to market strength is another thing which in markets like India, and we've seen something similar, different context, but similar things happening in China where actually the scale and the understanding of how to really get your product sold through what sometimes quite fragmented and complex channels to reach the end consumer, that's hugely important, often more important, frankly, than the exact strength of the brand or the quality of the product proposition. So if you've got local market scale and you're really good at dealing with those different distribution channels, then that gives you an awful lot of advantage. And you have to be pretty significant as an MNC, and you have to have built some significant scale as an MNC to really make that work. And that's partly why I guess you see lots of MNCs finding partnerships to try and make sure that they actually do get some of that expertise and some of that scale in the market to get the more relevant parts of their product proposition to land. But that's always a bit of a compromise versus if you've got a good local business which has got the right product proposition, it's got route to market strength, then that's a pretty good combination. I think where you see the global businesses and the MNCs perhaps having most success, either ones that have really been established in the market for a very, very long time. I guess if you look at Nestle and Maggi, it's a very well developed local proposition. Hindustan Lever is a slightly special case, but some of the same thing. Or where it tends to be then more premium, where the brand prestige really does matter. You're probably targeting a narrower set of consumers who are more engaged and willing to find that product. So it's harder for sort of mainstream food and drink grocery items. I think you see luxury goods, like high-end fashion, premium spirits, champagne. Those kind of things are automotive to some extent, premium automotive, where global brands and therefore global brand owners perhaps have the most success. So it's a sort of different dynamics playing out at different levels of the sort of price tiers.
Understood. I think that's all the questions from my end.
Okay, good. Pleasure. Well, thanks very much for taking the time to talk to me.